Well, good day to you, pro traders, and welcome to our Monday morning market review being held by GoPro Trading. Yours truly, Ian Giffen, here to help you through the charts, certainly our currency charts and a few other things. And just wanted to say that if you're enjoying this material, if you're getting value out of our stuff, then please do, first of all, hit the like button for this video. And don't forget to subscribe to our channel. We do bring out high quality professional trading on a weekly basis. And if you want to be given access to that as soon as it comes out, please do make sure you subscribe and hit that notifications bell on our YouTube channel. Also, of course, if you've got any questions coming out of today's training, please feel free to drop them into the comments below, and I will answer them all personally. Right, so looking at the week just gone, I'd say that the theme last week is similar to what it's been the last couple of months, in fact, which is been volatility around risk on, risk off. We can certainly see that with the main stock markets around the world, and the currency markets really following along that theme. So let's go through these one by one in turn, with the Euro USD always being our first currency pair that we like to look at, and also the most traded instrument in the world. Here on the weekly time frame, you can see that last week's candle was not much to it at all. It was a bit of a low test candle on the weekly time frame. You can see that the activity this morning on Monday is already showing more directional bias than we had for the whole of last week. Having said all of that, as we know from our previous analyses, we are sitting outside of our four-wave HTC channel. But it is not a valid pattern at all. You know, this is not a class one pattern. And I'd like to just point out that this is something that we've seen, that we are seeing across quite a few of the pairs, where, you know, as price action traders, we look to see what price does as it interacts with levels of support and resistance. Now, when it comes to our HTC channel, we've seen that level broken 3 times in a row. In other words, it hasn't been respected from either side. And it's worth noting that. So despite the fact that we are outside of that channel, and certainly that would mean that we potentially are looking for setups on the lower time frame. And in fact, we did get one, as I'll show you now on the daily time frame. We just need to bear that in mind as price action traders. All right, so looking at the daily time frame, as you know, being outside of the channel, we did get a setup to short this market at the close of market last week, Wednesday. Then with that volatility late in the week, it didn't look like it was doing much. But of course, if you guys know how to manage your trades on the daily time frame, you will know that we are still very much in this trade and are looking forward to being able to manage down our risk as the week progresses. It's not a guarantee, obviously, but we are looking at the market continuing in a bearish direction. Now, the trade management is always key when it comes to success as a trader. I just like to remind you guys of that, because I've found that a lot of people get married to their hands, as they say in poker, and it's absolutely essential that you need to focus on limiting downside at all times, and then you can let upside look after itself. So if you are trading the daily impulse, you should be in a short on this already, sitting at around break even. There's nothing for us on the lower time frames at the moment. We did look at shorting this last week with the H4 impulse. Those trades didn't work out because of that volatility coming through on Thursday. But let's keep an eye on that through the rest of the week. If this continues in a bearish direction today, we may well get a nice setup for some short impulse trades on the H4 time frame. Right, so moving through things a little bit quicker on cable. We did get a breakout on daily. Just want to point out that on the weekly time frame, let me just make sure that that's correct, we still are very much inside of our HTC channel, and there's no valid patterns there either. But with that bearish breakout last week, we were starting to look to see if we had any valid setups to go short on this, but it pulled straight back inside of that channel. Now, there is a potential valid M pattern, certainly with Friday's close being a bearish inside candle. So this is something that we were looking to potentially trade this morning. Dropping down to H4, you'll notice, however, that we didn't get any bearish setup so far. And in fact, now it has pulled back inside of the channel, precluding us from being able to look at taking anything there. So, but given the fact that this is a valid class 1 M pattern on daily, do keep an eye out for potential setups if you are a WM pattern trader. Right, so let's have a look at the dollar yen. You'll see here the USD strength and relative weakness of the yen showing itself quite obviously here on the weekly time frame. Now, we are still very much inside of a channel and we don't have any valid patterns on weekly, but when you drop down to daily, you'll see that we got a valid breakout. So any of you channel traders, you would have been looking for a setup from first thing this morning with Friday's close outside of that channel. So dropping down to the H4, well, it hasn't really given us much of a chance to do anything as yet, but a very strong bullish impulse candle showing itself at the moment here. We've only got about 20 minutes left to go for this candle. For me, that is not a very favorable setup because of the length of that. So if that's one of your secondary selection criteria, it may well keep you out of the trade. But without a shadow of a doubt, this is a very bullish market indeed. And there's nothing wrong with being long on this at all. Right, so then dollar Swiss on weekly, not quite the same picture. Last week, you'll see how we actually had a bearish candle for the week on USD Swiss franc. And it's quite a lot of activity again, first thing today, this morning. So last week we did discuss this in our previous trading last week on the in our market review, and we did also have a breakout then. So we looked to go long on this first of all with we were looking to go long on this with our H4 impulse. That didn't work out, but of course we got a very nice overlay to compensate for that through the course of last week. For those of you who are hybrid traders, you should already be in a trade on this and looking to manage the trade down to break even. In fact, in 20 minutes time, we will be trailing the stop quite significantly on this as well. So, so far so good on that hybrid for those of you who are hybrid traders. Right, so USD Cad Weekly again, you'll see that we just had another failed test of that resistance level here on the weekly time frame. Now remember, this is technically a trend until we get a ringed high over here, and that may well be the case this week. Last week's bearish candle setting it up for definitely for a potential ringed high, end of another corrective wave, phase two bringing that, well, a potential trend to an end, and in fact proving it to be a false breakout. So dropping to daily, similarly, you'll see that last week we had a brief breakout of our 4-wave HDC channel. So for those of you who were looking for trade the lower time frames there, in the early part of the week, we did in fact get a setup to go long on this. And again, that didn't work out. It got quite close to the target, but with that intra-week volatility, although we were able to reduce the risk to almost nothing, it did get stopped out for just short of a break-even trade. We had an overlay as well, which also, with a little bit of volatility there, stopped us out for a very small loss. So we lost a little bit of money on this pair last week, nothing to really cause any damage to the account, of course, but a little bit frustrating because of that. But that's fine because we had some good trades on our other pairs. Right, so Aussie, again, here's that picture of our 4-wave HDC channel, but the lower boundary of that channel not being respected at all and having been broken 3 times in a row. For those of you LPO traders, you know that we are currently in the middle of that LPO range, but when it comes to the looking to trade this with a breakout of that channel, because we did get a repeated close outside of that channel at the end of last week, just bear in mind that there is technically no trend here because we did have phase 1 followed by phase 1. So that already at a technical level is a false breakout. So nothing really to interest us there. So I'll just move on to Kiwi, because likewise here, you can see that we've got nothing to interest us. Phase 1, inside of the channel in this case, unlike with the Aussie. So really nothing to interest us there. And similarly, on the daily time frame, we are deep inside of the channel. The one thing that's noteworthy here, however, is that we've got a potentially valid class 1 M pattern on the daily time frame, which would allow us, therefore, to look for those of you who are WM pattern traders to short this market on a lower time frame. So let's drop down H4. And here you can see where we did have the breakdown of the bearish cyclicity initially with a phase 1 followed by a phase 1 aggressive reversal here into a phase 2. But that too has come, it looks like it's coming to an end this morning with a further breakdown in the bullish cyclicity in this case. So if in 16 minutes time we get a bearish impulse candle here, that would be a valid short trade for us on the Kiwi on H4 impulse. So do keep an eye on that. Some of you might ask me, isn't that actually a hybrid? Well, given the fact that we are technically in a bearish phase 1 again with that bearish inside bar last week, we are calling it an H4 impulse. So keep an eye on that in a few minutes time. So by the time you watch this, you'll be able to see what the outcome of that is. But nevertheless, regardless of what the outcome is, it's certainly a valid trade for those of you who are pattern traders, WM pattern traders. Right, let's move on to our yen crosses. Euro yen last week, we started off with a bearish continuation, but then that reversed on itself quite dramatically through the course of the week, and it came back and closed back inside of the channel. Also potentially setting up to give us a ringed low over here, and therefore a confirmation that there is no bearish cyclicity intact here at all, and therefore we will be moving our channel boundary down to this point here. So not really interested in anything there. And here on the daily time frame, you can see how it did start off with a bearish breakout of our 4-wave channel, but respected the ultimate support level here with the 3-wave channel. So bounced off of that and came straight back up again. Did we get anything? Yeah, we did. I think initially we were looking for an H4 impulse here, didn't get it. Certainly one of my secondary selection criteria is the length of the setup candle. But those of you who took it, you would have had a winner there on H4 impulse. We had a breakdown in cyclicity over here, giving us a valid setup for an overlay, which we took. Ended up being a slightly smaller winner than the full profit, got pretty close to the original take profit, didn't quite make it, but nevertheless a decent sized winner. That led to a resumption in bearish cyclicity, which broke down again. So those of you who were ignoring the fact that we had a short breakdown of cyclicity here may well have taken a short on an H4 impulse at the close of that candle, open of the next one. You'll be able to reduce your risk somewhat on that with the 3-6 rule, but the trade did not work out and was then followed by another bullish overlay, which was a very easy winner and actually made more than a 1-to-1 reward to risk on that. So we actually did reasonably well across those trades on the H4 time frame for the Euro Yen, but there was nothing on the other time frames. All right, so moving on to GBP. Here we are on the weekly time frame again, stuck very much inside of the channel, and you can see how that yen weakness coming through in the latter part of the week kept the price deeper inside of the channel. So it didn't even go down to test the ultimate support level of our 4-wave channel. And a similar picture here to Euro Yen, obviously, as you can see. We didn't get any valid breakout. We were looking for a potential valid class 1 M pattern through the course of last week. That didn't happen, as on Thursday it came straight back and closed inside of that previous phase 2 wave. So nothing doing for us on this currency pair. And you'll see that this is something of a similar theme across our yen crosses, and that's why I like to look at them together. Here on the weekly time frame, you can see a strong bullish engulfing impulse candle on the weekly time frame, bringing to a very sudden end that bearish cycle. Well, the cyclicity is still intact, but the strength of that bearish move, where we saw a breakout of the bottom of our 4-wave HDC channel. And there we have that quite a deep V pattern again. We've seen this across many of our currency pairs over the last couple of months in this highly erratic trading period. In any case, on this one, after we had a bearish breakout, as we discussed beforehand in our last session, We did get a nice winning trade on an H4 multiple winning trades on our H4 impulse. In fact, on this one, I think we had the hybrid getting stopped out for a very small loss, followed immediately by 2 winning H4 impulses. We then had a losing H4 impulse, which was immediately compensated for by a winning overlay. And that was pretty much that, because subsequent to that, we've obviously been in this extended retracement wave, bringing us straight back inside of the channel. And that really is the history of Swiss Yen's trading over the last couple of weeks. Cad Yen, a little bit less interesting. Similar picture, however, again, you can see a bullish engulfing candle here on the weekly time frame, showing us a pretty deep V pattern again here on daily. But remember, because we did have that bearish breakout of the 4-wave channel, we were looking to trade this. Once again, we did have a setup to short this with an H4 impulse. Didn't work out, but we had a full compensation for that on our subsequent overlay. So, that's the power of our overlay strategy, really helping to compensate for these this very volatile market where our core strategies are not quite making it to target. Right, Aussie Yen, similar picture to Aussie USD, where we seen this repeated non-respecting of the support level or the boundary, the bottom boundary of our 4-wave HTC channel. So nothing of real interest to us. Of course, last week just being a bullish low test candle, bringing us straight back inside of that channel. And again, looking like we may well see the confirmation, if you like, of the bullish cyclicity, which was started by this bullish impulse wave a few weeks ago. Looking like that on the daily time frame, nothing for us here. There was a potential for a bearish M pattern. Didn't happen, of course, because Thursday came all the way back up and closed back inside of that previous phase 2 wave. So we haven't been able to do anything with either the Aussie Yen or the Kiwi Yen, of course, well, certainly for last week. We did, I think, look at an overlay on this one, because remember, we were looking for, again, a potential M pattern here for the pattern traders. And we actually got 2 in a row. The first one stopped out for a loss. The second one was a winner, giving us a small net profit. Now, some of the folks were already looking to trade this in a bearish direction with the impulse strategies. None of those worked, but well, there were 2. Both of them got stopped out, but for very, very small losses. So this pair just shy of breaking even for the week. Moving on to our Euro crosses, Euro GBP, nothing of interest for us here at all last week. And you can see here, even on the daily time frame, despite the fact that today we've got some strong bearish movement, is really nothing for us to do at all. Deep inside the channel and no valid patterns at all. Euro Swiss Franc, as you know, my least favorite pair, last week failed to give us the potential for a valid class 1W pattern by closing just inside that previous phase 2 wave. And here you can see on the daily time frame, based on our discussion last week, we already spoke about the fact that we had that bullish breakout, but through the course of last week, certainly, in fact, immediately on Monday last week, it pulled back inside of that channel. So nothing doing there at all for us. Eurocad on weekly, again, we're not really seeing anything of interest, being very choppy around here, causing quite a lot of confusion for people in analyzing this chart. But to be honest with you, if in doubt, just leave it out. You can see that today we are, in fact, getting a test of our 4-wave HTC channel support level. Let's see what happens there. If this does break out in the bearish direction, and it looks like the euro weakness may cause that to happen, then potentially we could start looking to trade this on the lower time frames with a core strategy. Euro Aussie weekly, and this again, you can see how we've had so little happening on many of these pairs on the higher time frames. It's continued to test that resistance level last week, failed the test, looks like it's rolling over again. Even today on the Monday, deep inside the channel over here. But if you were looking for a potential W pattern to go long on this, just to confirm that close, if I remember correctly, it was marginally outside the XA or above the future X. Close is 87.7. high on this one, 85.4. That's right. So just shy of 2 pips outside. So that was valid. And of course, when we got the breakdown of the cyclicity of this bearish wave on the lower time frame, you might have been looking to go long on this with a bullish hybrid. It's taken quite a while to do that. So it may well end up being potential to trade this long only on H4 impulse, which is fine. You can see we did just take a short at the end of that bullish cyclicity and the bullish impulse wave on the daily time frame with an overlay, which worked out quite nicely. So that compensated for some of the choppiness in many of our other markets. All right, Euro NZD. Likewise, here on weekly, let me just bring that down. You can see that this has really been very flat. Last week, continuing to respect that support level and staying inside of the channel. Very choppy markets, nothing for us to be concerned with. Certainly not interested in any of these. Right, moving on to GBP crosses. Here we got Gbp Swiss deep inside the channel. Last week, we did have a bearish impulse candle, of course, ringing that previous high. But no valid pattern on that time frame as a selection time frame. And even here on the daily time frame, we had a very marginal slight breakout, as we know from our previous analysis, but that pulled straight back inside of the channel. Also failed to give us a valid M pattern. That hasn't worked out at all. So really nothing much for us to do there. If you were looking to trade this, however, on the lower time frames, then what we did have was an initial, we did have an overlay on this through the course of last week, which gave us a small winner. And for those folks looking to trade the hybrid, it was a setup for a hybrid, which, as you can see, has not worked out. And that certainly has been stopped out for a full loser this morning. And that's typical of a hybrid, which, as you know, is the most convex of our strategies. When they win a lot, but we do lose the majority of them. So for those of you who want to trade hybrids, remember, you need to have your H4 impulse and overlay strategies working first. GBP CAD on weekly time frame, again, inside the channel with no valid patterns. And the daily time frame coming down to test the support level here through the course of last week, and looking like this morning it's failing that test altogether. For those folks who are looking to trade overlays on this, we had a bullish overlay that didn't work out last week. We may well be getting another overlay this morning, so we'll look through the course of today. Keep an eye out for that. I'm not trading overlays on anything that's not specifically trending, but I know that some of the folks are practicing them with all phase 1 waves. Right, Gbp Aussie on a weekly, the only pair where we've really had a class 1 W pattern on the weekly time frame, as we know. But last week, putting a bit of a spoiler into that with a bearish engulfing candle. It wasn't an impulse candle, and it may well give us some continuation of this bullish wave. But regardless, this is potentially the breakdown and sequentiality of cyclicity on this time frame. Nevertheless, looking at that through the course of last week, let me just go to the correct chart. If you were looking to trade this with I beg your pardon, with a daily impulse, you would have been looking last week for that bullish impulse candle. And as you can see, we did not get it. And now, because we have got a bearish engulfing candle, that is over. So let me actually just update that for you folks. I think with our discussion on Saturday, we also neglected to look at this time frame. Technically, this is now the updated chart analysis for the GBP Aussie, which means that we no longer have a bullish trend. We had a breakdown in that cyclicity. Yes, it may resume, but for now, we need to walk away. The last of our pound crosses being Gbp Nzd, we haven't really had anything to do with this for quite some time. Looks like today we're already getting that low ring from last week. We'll look at that again at the end of the week, however. But of course, there's nothing there for us. The only thing that I would say is that had this continued in a bearish direction, it would have been a valid M pattern. So in fact, it was a valid M pattern. But given the fact that we've now got a higher high already here today, the start of this candle means that that is kind of out of the question already. So had that not happened, we would have been looking for a bearish impulse candle here on daily in order to trade a daily impulse in a bearish direction. As you can see, that is not working out at all, and we're just going to leave it alone. Right, so let's move on to our other crosses, starting with Cad Swiss. Again, you can see that looks like we're going to have this low ringed almost immediately at the start of this week, deep inside the channel here on the weekly time frame, and no valid WM patterns either. However, this bullish move that we saw over there may well be giving us a breakout of our 4-wave HTC channel on the daily time frame. And if that is the case, then that does set us up to potentially trade this with core strategies on H4. And also, if you have a breakdown in that bullish cyclicity, looking to trade overlays in a bearish direction. Aussie Swiss, again, weekly, nothing of any real interest to us here at all. As you can see, these Aussie pairs often look very, very similar. And even here on the daily time frame, inside the channel, no valid patterns at all. Aussie Cad, similarly, on the weekly time frame, nothing of interest there. However, we did have a valid M pattern here. This was our most successful trade last week, in fact, even though it took quite a while to work itself out. We just managed to get ourselves a valid M pattern. As you can see, we were discussing this on our mentoring session on Saturday. We got that inside bar on the daily time frame. If you're trading impulse strategies, remember, especially if the candle closes in the correct direction, then that counts as a continuation of the trend. In other words, the start of the next phase one. The way to confirm that, of course, is using multi-time frame technical analysis, where we saw the breakdown in the bullish cyclicity, which was the phase 2 wave. And as soon as we had that, we had the rollover and give us a bearish resumption. This was the initial setup for a H4 impulse. For whatever reason, I think maybe the length of that candle, we only took the next one, which was over here. Also gave us a better reward to risk ratio, it has to be said. And then, as you can see, even though it had a good start towards the take profit, and it was a 3-to-1 reward to risk ratio as well, it then came straight back and languished for quite some time. We managed to survive this using our 3-6 trailing stop rule, but just, and then literally within a few hours of the close of the weekly candle last week, Friday, it hit the take profit on that. So that was a nice 3-to-1 reward to risk ratio trade, and helped to make the week partially worthwhile. Obviously, Kiwi inside bar last week, and we've been talking about this for quite some time. We've had this very long extended bearish impulse wave on the weekly time frame with a continuation of lower lows week after week after week for several months. That has now actually come to an end. If this does roll over and continue down, it would still count as the end of that bearish impulse wave. Of course, that is only visible now this morning, and we will update that analysis at the end of the week. There's nothing really for us to look at over here. For those of you who are trading overlays on the lower time frame, however, then if we get a bullish impulse candle here, that may well be a setup for you to go long, given the fact that it would be a valid class 2 W pattern with that impulse candle. Pity we didn't get it beforehand. Remember, I also don't like to trade the overlay with multiple candles after the preceding or the last fractal. This would be the last candle that I'd be looking to enter a bullish overlay for this currency pair. But otherwise, nothing for us to look at on that at all. Moving on to our last two currency pairs, Kiwi Swiss, you can see not interested in that at all, because again, you can see we've got this phase one end of that trend, or the false breakout, should I say, no real trend in the end at all. And here on the daily time frame, likewise, we had nothing. There was the potential during the course of last week for a valid M pattern, but Thursday's inside close here, precluding that altogether. Some folks trading the end of that bearish phase one looked to trade a bullish overlay on that and got a decent winner out of it. finally, New Zealand dollar, Canadian dollar. Bit of a pity that last week we got a close at the end of the week inside that preceding phase 2 wave, meaning that it's not a valid class 1, potential class 1W pattern once we get ringed low, and it looks like it's continuing further down in the early part of the week, of course. So here on the daily time frame, it looks like this. We had that bullish breakout originally. So if you're trading the overlay on a daily time frame, then this potentially would have been something for you to look at. So looking at that breakdown and sequentiality of cyclicity, I don't trade overlays with a higher time frame criteria, looking like as we saw it on the weekly time frame, where we are inside of the channel. But if you were trading the end of a phase 1 on a weekly time frame, then you would have taken a short here on overlay, and that on Friday went straight to take profit. So not a bad trade altogether, which just goes to show you that if you want to start trading the overlay with slightly less rigorous selection time frame criteria, you can do that reasonably successfully. All right, so that's all of our currency pairs. For the rest, I'd say we can see here gold, just looking at it on weekly first, there was nothing really happening last week, as you can see, to really interest us on the weekly time frame. But when we look at it on the daily time frame, we did get a retracement to the what was support and now resistance level, which is our preceding HDC channel boundary. And if you're trading our strategies, you would know that this would be a great setup to short this on the lower time frames. However, I think on the H4 time frame, we didn't get a proper setup candle. It exceeded our maximum put value, which is the ATR on that time frame, on the daily time frame. Right, so the stock markets really, as I mentioned before, you can see I haven't really updated the analysis on this, not really interested. That very choppy behavior with huge swings in market sentiment from risk off to risk on to risk off. As we know, we saw a significant drop through the latter part of the preceding week and the early part of last week here on the Dow Jones, and then through the course of last week, it pulled right back up again, some very strong trading days. So waiting for a dead cat bounce on the stock markets. Let's wait and see what happens. Again, here on daily time frame with the S&P, you can see a similar picture. It's the strongest bearish move we've had for quite some time, certainly outpaces those preceding pullbacks that we had on this market. So I'm interested to see what the long-term outlook is for these altogether. Looking increasingly bearish, has to be said. Remember, I'm not a predictor of markets. I trade my edges, but this is definitely, from a technical point of view, looking significantly bearish. A similar picture here on the Nasdaq. And that's pretty much it. Not really interested in the UK stock markets. So folks, if you've enjoyed today, please make sure that you hit that like button again. And if you're not already a subscriber to our channel or a member of our academy, then please make sure that you do subscribe and hit that notification bell so that you can be updated whenever we bring out new training. Otherwise, for those of you who are going to be attending our training, remember we are going to be chatting again on Wednesday. And for those of you who are members of the academy, we do have some training coming out on Thursday as well. So please do look out for that. And I look forward to chatting you then. Bye for now, guys. Cheers.